Hello, good morning, and welcome to World Economy. My name is Blyden Ukem. On World Economy today, Elon Musk and X reach settlement with Twitter workers. Trump backs down from 250% EU pharma tariff in deal. And Beijing opposes bully US for 50% tariff on India. Plus, Nigeria deports 60 Chinese, 39 Filipino convicted in crypto romance scams. These and many more we'll get to talk about on World Economy. Welcome back on World Economy today, beginning the discussion from urbanization in Africa. At the top of Africa's urbanization, Gabon stands out with 84% of its population living in urban areas, the highest share on the continent. Meanwhile, at the other extreme, Burundi records just 15%, the lowest. This wide gap highlights Africa's diverse development paths, with some nations expressing rapid urban expansion, while others retain more rural-based communities. Urbanization often goes hand in hand with access to services such as healthcare, education, and modern infrastructure. For instance, a young professional in Gabon is far more likely to live in a city with better job opportunities, public transport, and digital connectivity compared to someone in rural Burundi, where agriculture and traditional livelihood still dominates. And now let's look at the sheer population living in urban areas in African countries, the top and bottom population living in urban areas in African countries. Well, according to statistical indications, it shows disruption that's happening. A closer look of what we're talking about. Let's look at a statistical disposition that shows urban areas performances. A closer look at the top urbanization countries shows that smaller nations dominate the list. Besides Gabon, Cape Verde 79%, and Libya 78%, and Sao Tome and Principe 78% all feature predominantly or prominently, suggesting that smaller population may find it easier to concentrate resources in urban centers. Meanwhile, countries like Botswana 76% and Algeria 74% showcase how resource wealth and economic policies can drive urban concentration. On the flip side, countries with large populations such as Ethiopia 23%, Uganda 30% remain far less urbanized. Let's still look at the picture that indicates urbanization in Africa, the top and the bottom. Apologies for not being able to have that. Still on World Economy. Billionaire Elon Musk and his social media firm X have reached a tentative settlement for former employees who had sued for $500 million in severance pay. The parties reported the deal in a court filing on Wednesday, jointly requesting the U.S. Appeals Court in San Francisco to postpone an upcoming hearing to allow time to settle the paperwork. Some workers sued the company over that termination and severance packages after some 6,000 staff, more than half its workforce, was sacked as part of a cost-cutting measure after Musk took over the company in 2022. Details of agreement are not yet public and will require the court approval. The lawsuit, led by former Twitter employee Connie McMillan, says about 6,000 people were wrongly denied benefits under the company's severance plan. They argue that the firm had failed to provide payment as high as 6 months' worth of salaries, among other terms. Meanwhile, the U.S. President Donald Trump has backed down from setting high tariffs on pharmaceuticals and semiconductors imported from the European Union. Last month, Trump said a pharmaceutical and semiconductors were not covered by US and EU's handshake trade deal, meaning those sectors could have faced tariff rates of 250% and 100% respectively. But according to new details released about the US-EU agreement, a US pharma and semiconductor tariffs will be limited to 15% in line with most other sectors in the trade deal. However, the EU will have to pass legislation reducing US export tariff to zero in order to get the 27.5% tariff on car exports reduced to 15%. Meanwhile, Beijing opposes bully US for 50% tariff on India. Chinese ambassador to India Zhu Fenghong has said that Beijing firmly opposes Washington's steep tariffs on Delhi and called for greater cooperation between India and China. Zhu likened the US to a bully, saying that it had long benefited from free trade but was now using tariffs as a bargaining chip to demand exorbitant prices from other nations. The US has imposed tariffs of up to 50% on India and even threatened for more. China firmly opposes it. Earlier this month, Trump imposed a 25% penalty on India in addition to 25% tariff for buying oil and weapons from Russia. The new rate will come into effect on 27 August. Delhi increased import of cheap Russian crude since the Ukraine war has caused a strain in its ties with the US and impacted negotiations on a trade deal. And back to Africa, let's look at Africa's commodity dependence. According to the United Nations Conference on Trade and Development, UNCTAD, a country is classified as commodity dependent if over 60% of its merchandise exports come from commodities such as energy, agriculture or mining. Over 60% of the countries in Africa are commodity dependent, underscoring the prevalence of reliance on primary exports. And notably, South Sudan leads the list with 99.5% of its export revenue derived from commodities primarily oil, energy oil, 89.9%, agriculture, 4.6%, mining, 5%. Meanwhile, Nigeria's commodity export dependence is 96.3% and dominated by energy, oil, 89.7%, followed by agriculture, 4%, and mining, 2.6%. With energy exports claiming almost 9/10 of Nigeria's trade earnings, the economy remains highly vulnerable to oil price swings. Nigeria's limited export diversification reflects deep structural challenges including insufficient value addition in agriculture and mining. Let's look at the top 15 African countries with the highest share of commodity exports in total merchandise export, looking at 2021 to 2023, according to the United Nations Conference on Trade and Development. And now we'll go on a quick break. And when we're back, the conversation continues on world economy, looking at the top countries in Africa and their performances, how they depend on commodities. year-on-year to 467.34 billion yuan in the first 7 months of 2025 amid global economic uncertainty. By sector, the manufacturing industry attracted a 121.04 billion Chinese yuan, while the services sector accounted for a larger share at 336.25 billion yuan. High-tech industries remain a bright spot, drawing 137.36 billion yuan in actual foreign investment. From a regional perspective, ASEAN investment rose 1.1%, while Switzerland, Japan, and the UK recorded sharp gains of 63.9%, 53.7%, and 19.5% respectively. Despite the overall decline, a foreign interest in China's high-tech sectors remained robust, highlighting continued investor focus on advanced industries. Meanwhile, Turkey tourist arrivals fall 5% in July. The number of foreign visitors to Turkey slumped by 5% year-on-year to 6.97 million in July 2025, marking a third consecutive monthly decline. Notable decreases were recorded in arrivals from Tunisia, a negative 20.7%, Italy negative 20.1%, Libya negative 17.4%, and the UK negative 9.7%. Meanwhile, the largest share of foreign tourists came from Luxembourg 16.5%, Finland 13.9%, and Sweden 2.2%. Among the destinations, Antalya was the most popular, accounting for 37% of all foreign arrivals, followed by Istanbul with 27%, Adani with 10.2%, and Mughla with 9.2%. In the January to July period, total foreign arrivals fell by 2.1% from a year earlier to 28.37 million. And now to destinations where tourists outnumber locals. The data we're about to give you is from UN Tourism. It compares the number of annual tourist arrivals with the resident population, producing a tourist per resident measure. Malta, for example, welcomes 3.56 million visitors per year, over 6 times its population. Worth noting that this outlook excludes the Vatican, the world's smallest sovereign nation, which has around 800 residents but can receive over 6 million visitors per year, equivalent to roughly 7,500 tourists per resident. Andorra topped the list with more than 52 tourists per resident each year, followed by Macau at 24. These micro-states have limited population but high visitor appeal, and Andorra's Sky Resort to Macau casinos. And now let's look at a table indicating destinations where tourists outnumber locals in the world. According to this standing and the projection that comes with it, Andorra is number 1 with a record population of 80,000 people, but tourists per resident, it's about in millions of 4.17 million people going to Andorra, and tourists per resident 52.13 per resident, 52.13 tourists per resident. Macau at number 2 with humongous numbers, Turks and Caicos number 3, and the bulk of the countries being island nations like Cook Island, Malta, and the rest of them. Meanwhile, places like Turks and Caicos, Aruba, and the British Virgin Islands each see more than 10 tourists for every local resident. The economies rely on hospitality, cruise arrivals, and luxury travels. This dependency, however, means global shocks like pandemics or hurricanes can have outsized impact in places like this. Even mid-sized countries like Austria and Greece see tourist ratios above 3 per resident. Albania, with 11.29 million visitors, stand out as the only large population country in the top ranking for tourists per resident. And now to Ghana's exports. In 2024, Ghana earned 294.9 billion cedis in total export, which was largely driven by 3 major commodities. As one of Africa's leading gold producers, the country earned 163 billion cedis from gold bullion alone, marking it by far the largest contributor to exports. And now let's look at Ghana's top 10 export commodity in 2024, according to Ghana Statistical Services. And Ghana's top exports begin with gold, and you see the indices there highly concentrated, and we're talking about cocoa, bullion, cocoa beans, and the rest of them at number 2. Meanwhile, crude production, oil at 52.6 billion cedis, and cocoa beans and superior quality raw beans at 14.9 billion cedis followed distantly as the second and third highest earners. Together, these three commodities generated 237.1 billion cedis, representing 78.2% of total export revenue. This concentration highlights both the strength of Ghana's natural resource endowment and the risks of relying on a narrow export base for foreign exchange and economic stability. In Nigeria has deported 102 foreign nationals, including 60 Chinese and 39 people from Philippines, who were convicted of cyber terrorism and internet fraud, according to the country's anti-corruption agency. The announcement by Nigeria's Economic and Financial Crimes Commission, EFCC, comes as the country step up a crackdown on online scam operations, which lured victims through online romances to hand over cash for fake cryptocurrencies investments. EFC spokesperson Dele Oyewale said another group of 39 Filipinos, 10 Chinese and 2 people from Kazakhstan had also been deported since August 15th. The anti-corruption agency released pictures of Asian men wearing surgical face masks lined up at airport check-in counters. The deportees were among 792 suspected cyber criminals arrested in a single operation in the affluent Victoria Island area of Lagos in December. At least 192 of those arrested were foreign nationals, of whom 148 were Chinese. Nigeria, Africa's most populous country, has a reputation for internet fraudsters known in local slangs as Yao Boys, and the EFCC has busted several hideouts where young crime suspects learn online scamming skills. According to the agency, foreign gangs recruit Nigerian accomplices to find victims online through phishing scams. Still in Nigeria, Nigeria's petrol prices have experienced sharp fluctuations over the past year. The average national petrol price climbed from 830 naira in August 2024 to a peak of 1,261 naira in March 2025, before dropping back to around 1,025 naira in July 2025. This volatility highlights the ongoing instability in Nigeria's fuel market, influenced by policy changes, global oil trends, and domestic supply factors. Let's view the average retail petrol price paid for by consumers in Nigeria since August 2024 to July 2025, according to the National Bureau of Statistics. We've seen the ups and downs. A closer look also reveals differences across regions and supplies. While the national average peak at 1,261 naira in March 2025, NMPC prices were much lower, with Abuja recording a low as low as 880 naira and Lagos at 860 naira. Dangote refineries prices also varied, ranging from 899 naira in December 2024 to 840 naira by July 2025. And now to the commodity markets. Its Malaysian palm oil futures hovered near 4,500 Malaysian ringgit per ton after 3 straight sessions of losses, supported by a weaker ringgit and gains in rival Dalian and Chicago edible oils. A settlement was also lifted by strong export expectations, as cargo surveyors reported that Malaysian palm oil shipments during August 1st to 20th rose 18.6% to 17% from July. In top buyer India, purchases in July jumped 16% from June to 301,000 tons, the highest in 9 months, even as Malaysia's inventories climbed to a 19-month high of 2.11 million tons. And now let's go to the markets, indicating the price of the different commodities to the commodity markets. The price of commodity market begins with the price of Brent, which stands at Brent crude oil, which represents Nigeria's price benchmark at $67 per barrel, and A U.S. crude oil at $63 per barrel, all gaining, but for Brent, no significant change in the market price. Natural gas falling, gasoline price falling, heating oil price falling, and gold price dropping a negative 0.35%. Let's look at further commodity markets. The price of soybeans in the market stands at $1,036 per bushel, getting 1.76 points this morning. Wheat price falling by 1.29 points. Coal price also falling. Steel price are falling. And now to further conversation in the world of economy. Slovakia unemployment reached lowest since 1991. Slovenia's unemployment rate edged down to 4.3% in June 2025 from 4.4% in the previous month, and this marked the lowest reading since records began in June 1991. The number of unemployed persons declined by 798 month-on-month to 42,398 in June 2024. The unemployment rate was 4.4%. And now to FX update this afternoon. A top currency gainers are South Korean won at 0.79% and dollar index at 0.11%. Meanwhile, the biggest losers in the FX market are the Polish zloty at negative 0.44%, Norwegian krona at negative 0.39%, and Indian rupee at negative 0.25%. Let's go to the market, the FX market, and see what the prices are as we're set to close. The FX market. The Euro USD market price level stands at 1.16 point mark, a drop but no significant change in the market. The pound against the US dollar at 1.34 point mark, a slight gain, not a significant change in the market. The Australian dollar against the US dollar, no change. So the volatility of this market has been a big concern. The markets are not really moving. For the markets in the FX market this morning, let's look at further markets. And for the FX market, indicating the US dollar against the Mexican peso at 18 peso to the US dollar, the dollar falling by 0.21%, the Indian rupee alongside the US dollar, 87 rupee to the US dollar, the dollar gaining 0.27%, and the Brazilian real at 5.4 real to the US dollar, the dollar falling against the Brazilian real and similarly gaining against the Russian ruble, 0.39%. And now to cryptocurrency market. A crypto market indicates the price of Bitcoin as 112,000 US dollars. A Bitcoin falling by 425 points this morning, this afternoon, negative 0.38%. Ether gaining 12 points, 0.3%. Binance gaining 8.1 points, 0.97%. And Cardano, Solana, Ripple all on the negative. Well, it's an indication that comes from our world economy as Germany economy shrinks more than anticipated in the second quarter. But this is so much we can take when it has to do with world economy today. Thank you for being a part of it. Many outlooks, many direction. And here we draw the curtain in today's edition of World Economy. Thank you. My name is Blyden Kim, and bye-bye.